So now we can kick off in our second segment, really looking at refined products in greater detail. What are some of the demand drivers? What are some of the tailwinds, headwinds that we're expecting across the refined product space? So just to kick it off, we always like to look at all of them as an aggregate. What is the trend? Where is the trend heading? And here's one of the guidance that we really given is that the average is just going to really be sideways to slightly down. And we did have a big surprise to the upside, but that more than offset to the downside here. And that's something where we continue to see that lumpiness. And it's twofold. One, because seasonality, you have things moving around, trying to get into position, make sure that the consumers have their heating oil, gasoline is at the pump. But at the same time, you also had Hurricane Delta, some of these issues coming through. So that's why when we look at that 4-week rolling average, you can see that it's starting to trend down, but we're still staying in this kind of relative confidence range, just because there's no real demand driver that we see that's really going to offset anything specific, especially when we look at COVID, how cases continue to rise. And when we do the economy show, we're really going to look at behavioral economics, like why are people not doing as much? What is really driving that? Because when we think about people's behavior, you're going to adjust not because of the amount of people in the hospital, but how many cases you're hearing about, how many things you're seeing, just because you're going to want to limit your total exposure. So that's why when we look at distillate, we have to appreciate, what is driving the distillate draw. So here we had a draw of about 3.8 million. We had a ULSD draw of 4 million, which again is nice. You can see the slope and the trend has accelerated to the downside, which is obviously a positive, getting some of this into the market. And Pad 1 and Pad 2, or the East Coast and the Midwest, were the bigger drivers. Now, Pad 2 should continue to see those draws. And the reason why we say that is because they're in the middle of harvest. Harvest goes through essentially the first to second week of November. You have, which means more trucks, more tractors, more rail, because you need more hopper cars to get it to market or get it into storage. So again, there's a lot of reasons why Pad 2 will continue. Pad 1, or the East Coast, that's really that prepping and movement for heating oil being disseminated out. But when we also have to consider what's happening with distillate. You had a little bit of a resurgence of jet fuel, which means that you're just going to keep the kerosene that can be dumped or blended into the distillate pool being preserved. So again, removing that. So here you can see on the production side, obviously Pad 3 went down because of the hurricane, but we're starting to see a little bit more yield. We're starting to see a little bit of an increase. And just as we start to see Pad 3 come back, we expect to see some of the production start to come back as well. Again, we still expect to see distillate draws. It's just we see additional headwinds on the export side, which is going to slow the draws, and we do see a little bit more production. But just given the amount of kerosene being pulled out, we will continue to see those draws coming down and normalizing a bit, which is an overall positive if you think about where we sit. Now, when we look at total demand over the last 29 some odd years, our view is that we were going to pull back towards that average, and we're just below. Now, we don't see any real reason to go back above that. We think we're just going to kind of bump along sideways, just because we have trucking that has slowed down a little bit. We have rail that slowed down a little bit as the inventories start to normalize a touch, which is really starting to be a little bit of a benefit. And in the econ show, we're going to look at essentially inventory to versus sales ratio on a looking at different industries to really understand, is there anything left that should see a big increase in not only rail traffic, but also in trucking. And again, it's really just the grain side that's going to be a bigger driver through the end of essentially the middle of November. But that's why, as everything is kind of primed on the heating side, that's one of the reasons why we think there's just going to kind of be this sideways move in demand. And the reason why, we also start to think, we think about that is if you remember our conversation last week when we talked about how we thought that truck demand was going to be relatively sideways. It got to about 100. We said it was going to kind of hang around 100, bounced up a little bit to 105. We think it'll bounce, come back towards that 100 level. And again, just kind of going sideways. There's still a huge amount of demand for trucking, which is why we're still going to see the demand levels that we have. And if you look at the peak in 2018, we've blown right through that, which is, again, going to be a net positive for overall diesel demand. But that's been realized. Like we've seen that. That's what's keeping us fairly consistent. And if you just look at some of those metrics, you're starting to see some of the rates roll over a little bit. You're starting to see load availability roll over a little bit, and you're starting to see that truck availability kind of flatline. So again, this is why we think we've now, as the inventory has been rejuvenated, again, not to full levels. There's still some pockets that are going to continue to see some resupply, but this is going to be something that we think is just going to kind of take us sideways as we go through at least not only just the remainder of October, but as we go into November. Then the question is going to become, do we get stimulus? If we get stimulus, how much goes to the person? How much is it going to be backdated, not backdated? How much are people going to spend? Because we are getting into the holiday season. So how much of this was pre-stocking ahead of holiday purchases? If it's not strong, does this going to come off? And these are things that we're always looking at. And that's why we like to look at these high frequency data points to understand, what's happening in the near term. And that's when we look to rail. So here you can see total car loads were down 7.5%. And it's really driven based on the different pieces. The one place that we continue to be bullish on, we can't talk about this enough, is grains. Grains will remain very strong, just because we have record exports. We have the yield is fairly stable. We have some droughts in some different locations, but again, not only is stuff coming out of storage, but it's being this is going to be consistent through the end of the year as the exports continue to pull. The one places where we think there, as we talked about, there's going to be more of a slowdown remains in the products, the petrochemical products, non-metallic minerals. The motor vehicle and parts is one that we think is going to continue to remain under a little bit of pressure, and we'll talk about that more on the Econ show. Year to date, obviously we're still down about 15% overall. But the one place that we want to focus on right before we leave is looking at the total intermodal units. So as we talked about, we had a surge in imports. Now imports have come down, but again, that still has to get to market. So intermodal is up 11% versus this week. It's still down 5% year to date, but it's still up 11% with total traffic at 2.2%. So again, this is another little bright spot for diesel. It's not something I think lasts through the end of the year, but it will. I think it's something that will last through at least the middle of November, especially based on just the strength of grains and just some of that restocking that we've talked about. And those are things where if we look at just some of these bar charts, you can just see the sheer size of the increases, and grains is going to continue to be one of those big benefits. The total car loads is going to be cut just because there's just not as much stuff to move. And that's just when we think about trucking has taken some of that demand. So we don't need as many car loads, but when we look at the intermodal units, there's just more stuff to move, from place to place, given the fact that we are trying to restock the warehouses. So those are things that we'll see some continuation, but then intermodal, something that we think is going to start to roll off as we get into November. Again, seasonally, which is why we want to look at this versus last week, just because there's those seasonal adjustments that we have to appreciate. Now, as we shift into gasoline, this is where we had a bigger surprise. So the expectation was that we were going to have a draw, and instead we had a build of about 1.9 million barrels. You can see it was the build was really driven based on Pad 1 as well as Pad 3. Pad 3 is another one that's going to be, we think there's going to be some of that continuation. But you also had a hurricane coming through and essentially decimating demand. So not only are you going to have some restocking, which just means that you're going to have gasoline going from storage into to the pump, but Pad 1 is going to be the problem. And that's why we always look at those imports. So imports were up slightly, but the bigger issue is that the arb is wide open. And when I say that, there is a lot of reasons why we're going to get an arbitrage where Europe is going to send more gasoline into the US, and that has accelerated over the last 6 to 7 days as that arbitrage remains open. So obviously gasoline prices were hit today, but again, 7 days of purchases is enough time to see a fairly large increase. So if you think about just sailing time, it's typically about 3 weeks. So we should start to see some of these imports start to hit the second week of November, third week of November, and those will increase through November and then it's going to appear in pad 1, which is something to watch. If you look at just where we sit on the 29-year average, you can see we're starting to turn up again, where that those draws have slowed down, and we remain seasonally adjusted near those all-time highs. Again, it's just going to come down to how much gasoline demand are we going to have going forward, which is what we're going to talk about over the next few slides. So here's when we look at total gasoline demand. We talked about how it was going to pull back towards the low, and here we are. We're right at about 8.28 or 8.3 million barrels, and it's something where we think that's going to go sideways. We might have a little bit of a tick up, just as there's some recharge and refilling in pad 3 post hurricane. But again, there's really nothing that we see that's going to take us back to within that cloud component. And the issue and the reason why, now it's hard to see, obviously, because this is the 7-year average, the 7-day moving average, but you can see we're starting to see a little bit of a slowdown in retail, a little bit of a slowdown in grocery. We're starting to see some of that rolling over, and it's just, again, we're getting a resurgence of cases, and not that it's causing an issue for the hospital infrastructure right now. It's just a matter of people are going to try to avoid. They're just going to try to limit the amount of exposure that they have, which is going to pull some of this lower as we go through the remainder of October, which will be a total headwind to near-term supply. So I don't like using Apple data, just because Apple data is, anytime you search, even if you don't use it to get from point A to point B, it registers as a search, even if you're not using it. So if you search 5 times for routes, it's going to think that you went 5 times. And at the same time, it also covers a much smaller percentage, but because it's been quoted so many times, we just figured it'd be worth showing just how even that is coming down as people are just adjusting. So the US is down about 3 percentage points. Germany's down about 7. The bigger ones is, if you look at just Italy and the United States, you see the shift lower just as people are avoiding the movements within Europe. It's something that is also happening in the US as we continue to see some of these slowdowns. And it's really just coming into, well, what is happening in the global market as we have COVID cases that have become a bigger issue again. Gas buddy data, we had a small decline of about 57 basis points week over week. You can kind of see how on the week of 9/27 was that nice little spike, and then we've had a little bit of a slowdown each week afterwards. So far, and this is as of Tuesday, demand yesterday, Tuesday, was 2.06% higher than the previous Tuesday. So the question is going to be, how much of that is normalized? The other interesting thing that we're starting to see is just people are using the bus less. And I don't mean bus as an MTA, I mean school bus. Like, people are driving their kids to school, which is a nice little uptick for gasoline demand, because not only are people taking less mass transit to work, they're also putting their kids on less buses, which is just also increasing demand. Again, not really enough to be a huge driver, because typically those drives are short distances. But again, something that'll be a nice little tailwind if we consider kind of the stability in gasoline demand at these levels. But again, nothing really that's going to drive us to that next level. And as we just look at U.S. Cases and deaths, and you can see how the divergence is there. One of the things that we always like to talk about, but the bigger issue is those cases continue to rise. And as we go into out of October and into November, and people are forced indoors where you don't really have the social distancing, then you have the aerosols and all this other nonsense that comes in. We're just going to continue to see those cases creep higher, which is just going to be that total headwind to activity, which again is just going to kind of keep us at this frozen level, if you will, of activity. Now, as we shift into jet fuel, we had a big drop in demand. As you can see, that it peaked, and it was something that we talked about where we were going to get this nice little peak because you had some, just based on the data that we were seeing, we were going to have a nice little uptick in TSA passengers. We were going to have some additional flights coming through, but now that's been recharged. We've seen that come through. The IATA was out today saying that they're taking down estimates in the Middle East and Asia just because they're not seeing the same type of flow through. And obviously Europe remains a big headwind as slowdowns persist with the increase in cases, not only in the US, but also in Europe, which is why we think, again, we're just going to kind of sit here in that demand level. We had a small draw of about 460,000 barrels. And again, that's something that we think is going to start to slow down, especially as we have some kerosene getting pulled out of the distillate stock and will show up in jet fuel now that we have a little bit of space available in storage. But again, that demand level we think is just going to kind of hang sideways from this point forward. So everyone is making a big deal about that spike over 1 million. Now the low is below the low that we saw before. So we had a higher high, but now we're having a little bit of a lower low. Again, we think it's going to average within that comfort level for us, which is that 550 to 750 level. We might get a little bit better where we'll start to average about 850,000. But it's not something that we think is going to be a bigger move, just because if you look at last year, you can see that we typically trend higher. The activity gets a bit more robust as we go through October to the beginning of November. And just given the increase in cases, it's going to be tough to see that really carry forward and really see that increase overall. And that's why when we look at flight departures, as we start to look at how is the jet fuel flowing, here you can see the change week over week. China had a bigger drop, and that's only because of Golden Week. So they added flights for Golden Week, just because in China people will move about within China itself, as we had a huge drop off of external tourists, but people still moved within China. So those flights come off, and here you can see Europe is starting to pare back flights across the board. And again, it comes down to some additional curfews, some shutting of borders, depending on where things are going. And as we, in Italy, we've seen additional lockdowns, the UK, additional lockdowns, France, additional lockdowns. And they're either lockdowns or curfews or additional pressure, which is going to slow down European. But if we look at the US, you can see that there was a nice little increase in total flights. Again, there's a preparation for that, which is why we saw that prep. We saw the jet fuel. Now that they're there, they've been realized. We think that there's going to be that slowdown and that kind of stabilization in jet fuel demand going forward. And as we talk about, the amount of gasoline, you might say, why are we talking about Europe right now? And it's because of those imports that I talked about. If we look at the amount of gasoline and storage in Rotterdam, in Europe overall, this is the inherent problem. As we go from September 21st to October 19th, you can see the huge drop off in city congestion, in just people going on the road, people moving about, which again, there was already an elevated amount of gasoline in storage. And this slowdown is just going to increase those builds, which is why we've seen several refiners announced new run cuts, which have already started and will carry out in terms of that roll down through October and really officially fully be realized in November, which is also going to obviously decrease total oil demand within Europe, just as Norway continues to increase, as we have Libya now closer to 560,000 barrels, which again is just going to be those issues and those overhangs, especially as we look at Europe. And when, not only driving are we looking at, but we also want to look at transit, walking. You can see general activity has really come off in the Eurozone overall, as again, people just look to do less. People want to limit their movements. Obviously, you have pubs, bars, curfews that have been enacted, again, impacting total demand as we go forward. And when we look at this, just because anyone who's been to Europe can say that a lot of these cities are walking cities, which is why that walking side is really important to also appreciate, not just the driving, but it's showing up in the open table data. So here you see that we had a lower low, and this is really as we start to see some of those increases throughout Europe and the US, which again is impacting just total demand for restaurant seating, which if we look at, this is just the year over year slowdown, but if we look at the regional breakdown, you can see the slow decline. Germany went from 7% down to 10%, and you can see it was slow. It wasn't an aggressive move. It didn't happen all at once. But we saw those issues come across, which is why we think some of those seating issues are going to be a bigger overhang as we go forward, especially as we look at the global side, where we were comfortably at 35%, peaking at maybe 45% during the weekday, but we think that's going to go closer to 55% to 45%, especially as things get a little bit colder in the U.S., which is why if you look here in the U.S., again, we're trending towards that down 55%. UK is going to accelerate just given where things sit. Ireland, same thing. Germany is going to be another issue. And then this doesn't cover Italy, France, but again, same thing just in terms of total demand, which is consumer purchasing, consumer movements, getting stuff from point A to point B, which is less diesel, less gasoline. Again, those are the total headwinds. And then just wrapping up this segment, again, this is looking at New York City total MTA entries. And you can see on a 7-day moving average, it's slowed down a little bit. Some of the headlines coming across is the New York City is back at May levels for infection. Again, this is just going to slow down people coming into the city. And typically, as we showed last week, New York is kind of a good bellwether for the average, and that's why we think those averages are just going to shift lower. Not much lower versus this 7-day average. We think it's just going to kind of go sideways as we go forward. And then in the next segment, we're going to look at how is this impacting not only the U.S. exports, but what is happening abroad and in that international market, not only in oil, but also that refined products.